these are going to be the top two stocks for the rest of 2025, even in a market correction going into 2026. These stocks are very deep valued stocks. They've already started to see some crazy movement. We're going to go over the full thesis for both of these, and you guys are going to get a first look at my book and how I find these types of stocks. Now, we'll first just go over the big version of the stock, the biggest stock. It's a big market cap, and it's UnitedHealth. I've been talking about it on this channel since it actually bottomed about $234, I think is when I made my first video on it. Got very lucky finding the bottom. But we've started to see one of the greatest signals I like to see on the technical side, and this is going to be volume. So the volume is the greatest we've ever had in the stock. And this is buying volume. So it closed out the month actually green because we hit that 234 at the lows, and then it went up. Now we're back in nearly 310. So this is super bullish to me. I think that just as I had thought that potentially we start to see some big investors come in, I thought Michael J. Burry, I thought it was potentially going to be a stock that a Warren Buffett would like. And what do you know? They ended up buying it. So I think we could probably see a 13G, maybe not a 13D where they're actually active, but once they cross 5%, I think that we're going to start to see that soon. So this is the first stock. The next stock that we will talk about is Delek. Now, before we jump into Delek, and I think that's probably going to be the one that's going to have a potential type of squeeze because of what they basically just got their market cap in cash. And it's a very small and tightly held stock. Now, UnitedHealth Group is one that has done phenomenal when the market has actually been down. When we had this 21% drop in April, and if you're actually looking at the chart, we'll look at the overall market on Friday. So a lot of big stocks were down. Nvidia almost down 4%. Some very big stocks, market cap wise, Oracle's down like 6%. So you're starting to see potentially what I thought, this rotation into the safety side, which healthcare stocks related to S&P 500 are literally at one of their all-time lows. It's been like 25 years they've been this low. And UnitedHealth Group is getting that crazy bullish volume coming in. And I think that we'll probably continue to see some buying in safety because remember, back right here in April, whenever we had that drop, if you look at the weekly chart, this was actually green at 600 plus. So the market dropped 21% in a big correction quickly. And this was still 600. So it wasn't until they had, the outlook cut, for the future, which is going to change. We've talked about it. Not really. This is the month that we're going to start to see for September, some very bullish catalysts with their outlook for their pricing. They're going to they're raising it 26% for the Medicaid and Medicare. And what's going to happen, I think, for the state levels, they're going to get that approved. And then come January, they're also going to raise everything across the bar. Rates are going to go up. So this is going to be very, very bullish for the stock. We've never seen this type of buying volume, even when the COVID drop. And obviously this is going to be a stock that everyone wanted because it was the time where healthcare was booming back then. And it still didn't even have this type of volume. So you're starting to see safety, I think, and there's all that money on the sideline, $7 trillion. This is going to be a stock that's probably going to be safe going into another correction. I think a lot of the money will flow there because even when markets go down, and when I normally do my best in the market is when markets crash. So if you've watched my channel, we've talked about 2021 into 2022. I called that there was going to be a market correction soon. I didn't know exactly when, but I was heavy cash, kind of like I am now. But I am very heavy in both of these stocks. I don't have as many shares as I normally would have in, say, I think, if there wasn't going to be a market crash, I'd probably be buying a lot of shares long term. But I'm heavy in options in these leap options. So very big amount and very exposed. So basically, if I wanted to exercise these, the amount of cash I would need would be a lot of my portfolio to exercise. Obviously, UnitedHealth Group, when this stock's over $300 now, I bought a lot of options in this. And same thing with Delek. Options as well. That's how I'm playing this. So although I do have cash ready, if there is a market correction, these two plays over the next few years, I'm heavily exposed to the upside and not much downside because I was very, very lucky in getting in this area. And when you get options in that area, and we'll talk about in my book, how I think that Centaurus Energy is very similar to the stock we're going to talk about, Delek. So it was in the 20 range. It dropped down into the 20s, and this hit $250 recently. So we've been covering this stock, made almost 200 videos on this. in the sector for energy, nuclear energy, and this dropped down from into the 20s. And I had bought a bunch of options on this and had a falling wedge in a downtrend, very similar to Delek as well. And there was news, and I told everyone in the Discord, I was like, I like the chart. We obviously have been buying this for a long time. And I said, I'm going to be buying these leaps. These are the leaps I got. So this is my book. It's about 56 pages, and it goes over pretty much everything. Some of the greatest stock investors in the world, what I've learned from them, stuff you normally don't see and hear about, from technical and fundamental analysis. And there's actually, you get this for free if you join the Discord, the Patreon, if you want to support the channel. But this just shows that when I bought these options, and by the way, these should have been not 100, this should have been 1,000. So I was posting to everyone here when I bought these, right, literally you can see the screenshot here at the 1st of June. And it's very similar. There's a big catalyst. There was some very bullish news that the government was going to be supporting, and their Centaurus Energy is pretty much the only one doing this with HALU. The government was going to be putting billions of dollars into this, but they also had this bearish scare where there was Russian uranium ban, and I had been covering this for years. So I ended up getting only 100 of those, which should have been 1,000. I hit 100, and I thought I hit a 0 again. My keyboard has been like sticking. So I thought it actually went through. So then I went and did everything. And that's how sometimes quick you got to be on these flash crashes. Now, within like a few days, I mean, some of these were up 500-600%. This was just a screenshot I had taken at the time. And that's what's great about these energy plays, especially if you know the sector. Now, Delek is even better than a Centaurus Energy. Now, Centaurus Energy went from $3 to $250. So it's one of the greatest stocks actually gains in the last 10 years. So it was $1 and $2.50. So you're talking about a 250 bagger already. And I think someday this will become a 1,000 bagger. Now, this isn't the stock we're talking about. This just shows you, this is my book. We're talking about this is literally about how I find these and I go into it. And so you got kind of a little peek of my book. I haven't really talked about my book, but it's great. I actually go look back at it myself sometimes because I have quotes in there from the greatest investors, just charts and things that I go back and I'm like, oh, that's right. And it also kind of motivates you because when you build a thesis, on this channel, we talked about that stock hundreds of times, right? And it played out and made people millionaires. So I think Delek is very similar. Now, this is the chart back in 2018 when it hit $61. We are now at about $27. We just hit a 52-week high. So on Friday, Delek and UnitedHealth Group are one of the top stocks in the market. Now you can see the entire sector here. A lot of the refiners were actually up. So this is a sector move too, which is good because they actually want lower oil prices. So we have lower oil prices, and that's a great thing with low oil. And then you have them making diesel. So they are going to want low oil prices, and then the crack spreads, they're rising. And we haven't seen these low inventories since literally almost 20 plus years. So the inventories are so low, so prices are going up. And then diesel prices, that's what we want. We want the crack spreads to go up. And this is what's happening. And you haven't seen ever. Actually, we've never had this amount of bullish volume. So 48 million shares have traded. We even never had this at the peak when it hit 61. Didn't even hit that. So it's never seen this before. And we're talking about a very similar situation. So what Delek had, why it is literally, and the market cap is not this big. Always the chart does this, but the market cap is right now about 1.6 billion. Now, this is a far better company than Centaurus Energy. This company brings in $12.24 billion. They have a lot more free cash flow coming in. And if you just look at the chart, you're like, oh, there's debt, but that's not true. They are a sum of the parts play. So their debt is actually not them. It's who they own, which is DKL. It's another stock. So DKL, they own about 65-70%. And this is the company that has that debt. Now, when the algos companies are looking for stocks, that might turn them off. So, but the thing is, they're not susceptible to this. So they don't have to actually pay for that debt. They actually own and they're getting money. They're getting literally dividends from Delek, DKL. So Delek, the holding company that actually is the one that also had the major catalyst getting these SRE refunds and future costs, their margins are going to be, able to grow like never before seen. Not even in 2018 have they had this much bullish outlook. So they got 4 refineries to make diesel and jet fuel. And we've never seen this type of bullish outlook because they're a far better company making a lot more money now. But you also have that the DKL that they own 65%, and I'll go over the thesis here. They are trying to start to sell shares, make money off of it, but still getting the same free cash flow coming back to them. Now, why this is such a major catalyst, and guys, I've been talking about this since $15. So in the Discord, I posted this back in May, and I've been watching this since it was a play that I said, you know what, come into the new year with a new change of command in the government. I said there was going to be a very bullish outlook. And at first I was like, you know what, oil, but no, it changed into diesel because oil, they want low oil prices because they don't want inflation going up. So we modified the thesis, and I've been watching Delek, and it dropped down to about $11, and I pulled the trigger at about 15. And that was because for this company, they are pretty much the amount of cash, 700 plus a million, is almost half the market cap, right? But then what happened was my full thesis was the SRE refund, which looks like it's now what has been improved, about 70% of those. Right here, they got the full grant for this refining facility in 2021, 2022, and they got a partial grant for 2023, and then 2024, they also got the full grant. That's one of their facilities. So they got about 60 to 70% already. Now, Bloomberg put this out and said that even if they just got 50%, and this was a few days before they were approved, and this was the whole foundation for the thesis for a re-rate to say this thing's probably going to double from here, from where we're at right now, 27. I think it could get to $50 to $60 easily, very easy. And the crazy part is this stock has a mega low float, only 60 million shares, and 111% of those shares are already locked up by institutions. And that is including shorts, which are on 12, 13%. And the rest is derivatives. So you got puts and calls. So a lot of those, I have a lot of those in there as well. And the thing is, this stock has already, I've done phenomenal in this stock just from 15 already. But what I think is going to happen is it's going to get the re-rate, just like Bloomberg was saying, because the company, it's literally trading for free. The refinery part, bringing in 12 plus billion, it's literally free because they have the cash, and these SREs could be up to 900 million plus the future margins. They're going to be phenomenal because they don't have all these high costs every year, hundreds of millions that they were paying. That's why they got these refunds. Look at this. You can see they were projecting from all 4 of these refineries, which they actually got. This was before, remember, this is on the 21st of August. This is before they were approved. Now, we were tracking in the Discord. We got word right when it happened. And the stock hadn't even reacted yet. We knew about this, and this was my full thesis that this was going to happen. And I believed that it was going to be 500 plus million, and it's even better than that. It could potentially be over 900 million. So they said, because we really don't know exactly how much this is going to be, management has not said specifically what they think will happen yet, because a lot of this stuff, they can sell these, and obviously the future, they're going to have to, everything's going to get a re-rate. You know, you're going to have analysts saying, hey, we think this is going to get 60, 70 bucks. That's why I think this is another Centaurus Energy, another LEU. So I think it's a massive opportunity from now going into their earnings back in November to get a re-rate. I think the stock's already starting to squeeze. We already saw the volume, 52-week high, you know, in the stock. We really had, this was when the SREs happened, the biggest volume ever in that particular day. And then we're starting to push up. If funds want to get in for a double or even maybe a triple from here, they're going to buy it, and it's going to move it up. People are buying this up. Funds, you know, it's 111% of the market cap already, and it's already a small market cap. So I think this is a major squeeze potential. Now, we're going to probably see this stock and UnitedHealth Group do really well in a market pullback, because when energy like this, prices go up in the winter, we're seeing the record amounts, low holdings of diesel we haven't seen for 25 years, that low. It's going to make these crack spreads go up. So Delek, I think, is going to be probably the biggest beneficiary of this, especially in the near term. I would love to see this break through like $33, $34. But like I said, long term, and this thing pays a dividend. Long term, I think this thing's going to be going into the maybe even triple digits. they get these margins. Like these margins are going to go up like crazy. You're going to start to see the debt. They can wipe out the rest of the debt. They've only have about 270 million in debt. So that was one of the big thesis points. The market has no clue about this. This stock there's pretty much no retail in it. It's all institutional investors. And the earnings recently, right before this was released, was very bullish. The outlook, and they have not even talked about the SREs in their outlook. So this is not even in there, that 900 million. So I think it's going to literally, I think it has a major opportunity to squeeze and get that re-rate, because the sum of the parts now is just phenomenal. The margins are going to be ridiculous going forward. And because the market cap's only 1.6 billion, I mean, this thing, like what LEU Centrus Energy makes like literally like 12th of that revenue that they make. And the thing is, they trade very similar. So I honestly think this thing will get to triple digits in the long run. And I think the re-rate could be a double by earnings. It could push it up into earnings. And retail's really in control here. If retail really wants to get in this stock and move it, I really think that they can. I think that the market's has not been fair with this stock, because you get this refiner for free, literally. Right now, because of the cash and the SREs, it's more than the market cap right now. So you literally bring in $12.5 billion, and the outlook's phenomenal. It's like you want low oil prices, you want higher crack spreads, and we're seeing record amounts across the board. Not even better than 2018 for them, I think, because the SRE, the future, the costs are going to be going down. Now, Wolfe Research put this out, and it was saying that they're the most exposed to the ones that were getting this. That's why I chose this stock out of multiple refining stocks. Now, what they were saying, just like Bloomberg, because Bloomberg before said even if they just got just a few, half of them, it's going to be a big re-rate. And now they got like estimated, it's around 70% of what they actually put out there to get the refunds, 70% of them. So what they're saying is basically they think that this is going to be a potential double from here if they had got these refunds. And this was also before, this was before that the news actually came out. So Wolfe Research, even if they were saying that the binary upside skew event, 1 year of the reliefs, which they got way more than 1 year, could be 20+% gain for the stock. So full approvals, they said they think is double the stock. So they've got not only like the 70% of these approvals, some more are still pending, but they've also, the future is going to be a lot better for their margins, like we said. And one other thing about this stock that's big is they've got a big cash balance. They paid the dividend. Now they've also got 500 million still, over 30% of the market cap, in repurchases. Well, guess what? They have not even bought back that much in the last 3 months. Okay. Not even 1% of the volume last month was their repurchases. So they've got a lot left. And I think because now they got these SREs, they're like, whoa, okay, our stock is worth way more now. So I think that they're going to, and they might have been doing this right now. That's why we've seen this big move up just in the past few days. It's not only them doing repurchases, because their stock is cheap and they know that there isn't very many shares left. And the owners, the insiders have been buying as well at great amounts. Okay. So a lot of them were already buying in the market. They know that the stock is undervalued. And then you got 111%. And then you got 13% of it is short. 111% of the float's locked up. So all these buybacks, if they kick in, 500 million, they could buy back the whole company, like literally the rest of the company. Now, what they also have is they have shares in Delek, and we'll look at that in a second. But the shares in Delek is one thing that they're able to sell off, so other funds can buy DKL, the other part of Delek, and they can still get the free cash flow. In fact, it's been going up. Their free cash flow has been going up as they've been selling that part to get the re-rate for DKL. So they own literally 64%, and it trades at 10x EV to EBITDA, and the yields are around 11%. So the big thing is they're wanting to like spin this off, because this is a sum of the parts play. They own a bunch of different companies, and they sold their gas stations that they had, got like 300-400 million for that. And you see this chart, you can see they own 79% of DKL, and then they now own 63, and they are still getting, their EBITDA is still going up. So $76 here. And you can see same chart over here, the distribution to DK, the distribution, but the ownership, the distribution is going up, but the ownership is going down. That's what they want. They want other people to buy up their shares in DKL. And they've pretty much, this is the way I love companies being ran. I usually don't like dividends too much, but when the float is really tight, it really keeps it strong. But share buybacks is what's going to be great for this now that we see that the stock is worth what it really is, just in its cash and just in the SRE refunds. And the big thing is people see this debt. Well, the debt, it's not even like 275 million. And they're also reducing shares. That's the great part. So this is the real debt right here. So DKL, that's not their debt. Okay. That's a different stock. Okay. There are some of the parts play. So they on the books now only have about 275 million. Well, just their cash, they could pay that off. So it's mega safety for downside risk here. And the fact that they got these SREs, their costs, their margins, and the fact that we're wanting to build things like never before. So diesel is heavy. You're going to see a lot of manufacturing, hopefully when rates come down, building of houses. So diesel prices are still going to be up there, but oil prices, we want them low. So this is probably the greatest golden swan event ever for this stock. Pretty much a president that says, if you raise oil prices, which they don't want oil prices to go up. He said, basically like, we're going to be watching you and you'll face the consequences. So that's the way it is. That's great for this company. And there's a lot of other stuff that I covered in this, but really the few big things, they got the SRE refunds. That's more than basically their market cap. The outlook is phenomenal, low oil prices, but high crack spreads. You've got other refiners that are down. When we hear from management and we get the re-rates, that's why this stock, I think, can double, maybe even triple in a very short amount of time because the float's so small. And, the great thing is they still are able to pay the dividend out to investors. And like I said, when people look at this, they just see that debt from DKL and they don't even understand that they are super safe. Okay. The stock's super safe in the long run. And one of the other things here that I want to show, the crack spread. So right here, this chart is a little bit older, but when the stock was doing a lot better, these crack spreads were higher. Well, now we're already pushing 32 to 42. So this chart was a little bit older. That's what 2024 was. Now we're already getting up higher barrels. And in some places like California, it's going to be already in July, it's been over $42. And they're projecting this, I believe, to hit potentially 55 in the West Coast, 50 to 55 because of outages, just local issues. The Midwest, it's going to be moderately higher as well. Strong local demand as well. When you're in the East Coast, it's heating and imports, the seasonality of it. Gulf Coast, same thing. It's elevated. We've got outages, export demand. That's a big thing right now. Going overseas, export. People are not wanting to buy from Russia. They want to buy from US. And then you've got just the US average low refinery runs and exports as well, just all across the board. So this is very, very bullish. So back in 2018, DKL, who they own, it was subscale, about $15 a unit. Now it's 47. So 2018 is just so much different for a stock like Delek DK. And now we're starting to see DKL, that part, it's starting to do well and it's getting its own, investors and funds. Yes, Delek still owns, 63% of it, but they're going to be selling that off. That's great as it goes up, and then their free cash flow, they're still getting that coming in. It's just phenomenal. So I'm really bullish on this stock. I like that these CEO and a lot of the directors were adding shares. These are some of the things. The biggest thing was a lot of these posts. This is stuff I posted in the Discord, by the way. A lot of these things were posted back in May. So I was going to show you guys how many times I've posted about this and in the Discord, why you got to see it first and why people are up. Some people are up 6 figures already buying this, and some people want to hold this for the long term. But I do think that this is probably going to be one of the best ones going into 2026, especially because when rates come down, it's going to be seeing a lot of diesel use. Okay. You also are going to see crude oil prices potentially going down even more. So with these crack spreads, the EIA, they're saying that basically they see these going up and they see crude oil prices going down. Okay. So the crack spreads is really what you want to look at. Crude prices going down. Look at this. That's the great part. Going down, but you still got these elevated diesel prices. And especially where Delek is, they're more in the Gulf area. It's a lot more bullish for the stock. You've also seen, something I want to show you guys, everyone, is that we haven't actually seen buying. We've been seeing selling, and it's still strong from some of the ETFs. Now, there's not as many ETFs, and it's a smaller stock, although a lot of it's held. If we're looking since 2022, there was a lot more buying, 15 plus million of the shares. Now it's dropped down to like 11 million. So what I'm saying is you still have this upside for them to come back when the ETFs cycle starts going back to energy. I think that's going to start happening now into energy refiners like this, kind of like in 2022. What happened in 2022? Oh, tech. Oh, there was a tech crash. Oh, so they were buying up. That's why. Yeah. So 2022, you saw a lot of buying as everything was going down, going up. And then we had the war and everything. We have the same thing with Russia. A lot of people are wanting to buy from the US now. That's why we just saw a 52-week high for the stock. Very, very strong technicals. But you have this upside for the ETF rotation back. There's no shares. So when they do, it's going to push the thing up. 50, 60 bucks could happen. Just the ETF rotation back in. Millions and millions of shares coming back in. Then you also have funds. Funds are actively buying this. You have a lot of funds holding it already, and there's not many shares. Then retail. Now that retail is starting to see that, oh my goodness, that they have their cash in market cap with SREs, the story's getting out there now. And we've seen the volume's been the record volume, right? Well, it's not just retail. We've seen institutional volume up. We've seen professional traders up. It's also small traders, everything across the board. So that's what I like when you start to see retail, the retail brokers starting to buy it up. That's bullish, especially when the stock is such a small market cap and the float is basically nothing. So just me buying some of the options, the gamma on this, even closer options, you can see the market makers are having to hedge those, and the stock, they buy shares, and the stock moves pretty quickly. So I think that funds have been doing this, and they've been trying to also hold it back a little bit. This thing dropped down to $11, a phenomenal play going into 2026. I think this is very similar to when we saw Centrus Energy LEU at $24. And what happened with Centrus Energy? Well, those options went parabolic. So by the time this was said and done, I think the options, and what's crazy is you have $40 options now in these. They actually made $40 options in Delek. But what's crazy is these were up like 2,000, almost 3,000%. So if the same thing happens, we get a re-rate and then the stock pushes to 50, these options in Delek are going to be worth 2,000, 3,000% more than what they were recently. Okay. So it's a massive upside. I think it's very safe too. And like I said, I've been talking about this for a while. And the thing is, not a lot of people care about it right now. Like, look at this. I'll get 800 likes on something like this and 100,000 plus views, on some of these things. But with Delek, there's not very many people know about it. This one literally only got 39 people. So this was the original post. So I posted about it early May in the Discord, and this was still when it was like, I think this day it was up like 20 or 15-20% within those 2 days, already like $19. But when we originally posted in the Discord about it, it didn't get a lot of views. I think I posted a few other ones, and it literally only got like 3 or 4 people liked it. But I was talking about this being very similar to Delek, being similar to Centrus Energy, Delek. And, looking at it, I'm like, I see the price in Centrus Energy now, and I'm like, man, I wish I still had a lot of those options, a lot of the shares still in it, because Centrus Energy, although it is still very volatile, recently at 264. And, we were buying this thing at $3. This thing had dropped down to literally $1. So this thing is a 250 bagger. So $1, 264 bagger right here. So 26,000 plus percent. So it's almost doing as good as like Nvidia. It's actually beating them. But the stock only brings in 397 million. Okay. The free cash flow still low. The great thing is the float. It's still, they've been raising money and taking out some debt, but diluting a little bit. But the thing is, I think Centrus Energy is not even as good of a stock as a Delek because of the revenue and the margins increase that they have, the opportunity here. So although I still believe in nuclear energy, I know that right now diesel is going to be big. It's going to be a great for 2026, a great play. And that's why Delek is going to be one of the go-to plays, I think, for refining. As you saw Bloomberg saying, it literally is the one. And we've gone over this, like I said, for months and months and months in the Discord. So if you guys want access to these things first, when we first find a new Centrus Energy, and you want to be there when we buy it at $3 and it goes to $264, that's better than a Palantir, right? Better than the Nvidia right now. So yeah, we talk about these in the Discord, and I've got a lot of people that are very bullish in these stocks, and we all do a lot of research. We bring it in. So we knew about this stuff before the market was even talking about this. Before Bloomberg was putting out a piece about SREs, I was talking about the SREs back in May and why they were going to be the best one. And then Wolfe Research as well, talking about it. So I think this is going to be probably the best play. And if you guys want access to my book as well, not just the Discord, but my book talking about some other plays that we went over, the entire book here, you can kind of see I've shown the technicals. I talk about and show in the Discord when I posted about this, because I'm buying this at $6. Carnival Cruise, talking about the flag and pennant and how literally the stock, and you can see this is the book here. This is what's all in it. I won't reveal too much, but you can see how much I've put effort into this. Not talking about options as well, but also some of the greatest stock traders of all time. A lot of their quotes, a lot of things that have happened in the market recently, because, these types of plays like Delek can change people's lives. I already know a lot of people who are already up 6 figures. Some people are probably going to be up 7 figures in this stock, especially UnitedHealth Group as well, because it's very safe as well. So both of these are going to be massive runners, I think, into 2025 and into the winter and 2026. So these two stocks, we've been talking about energy. We've been talking about the healthcare sector. I think they're going to see the flight to safety, and we're going to see probably some of the greatest gains in a long time from these two sectors, especially in the options, because a lot of these options are probably going to be up 3,000+% within the next couple months. We're already up hundreds and hundreds of percent for some of these. So if you guys want access to this, you guys want access to my Discord where we talk about this very, early on, before the market does, and you want access to my book. By the way, if you get in the Discord, you get my book for free for the month if you want to come in and check it out if you like it. If not, and you don't want to see what I've been buying, because I bought options on both of these stocks, been buying them nonstop for the past few months, all different types of options. I've traded some of them I've had to take profits because they were shorter term options and they expired, like within Delek, but I'm moving into new positions within the stock options wise. So if you guys want to know what those are, and you want to know exactly when I'm buying those and why I'm doing it, then hit the link in the description below for the Patreon, and you'll get the book for free. So thank you guys for checking out the video, and I'll be talking more in the Discord about specifically these two stocks and what I see happening this week. We've got a lot of news with like tariffs, potentially some, things changing. So I think it's going to be great for these two sectors. And especially if the market gets spooked, money is going to run to safety.